And then I'm going to welcome each and every one of you onto today's call. As we always do it, it's going to be the same things today. Q&A mostly. I'll be running through our chat. If you have any questions,
You feel sorry for Lighthouse Pastor, Pastor Henry. He was selling this.
and please don't forget, mute yourself once you get on the call. Mute yourself once you're on the call, please. Yeah, so we've had so much question on AU about how price got delivered in AU today. So what happened with AU today was really quite simple and straightforward. However, it wasn't the kind of setup I personally wanted to take. Hence why the delivery was so smooth. However, I didn't jump in and I didn't encourage you to trade AU. Okay, so looking at AU, there was a clear imbalance around this area, right? I think I already have that box there. Yes, I did have it. There is a clear imbalance around this region, right? I stretch it out, you see everywhere here is an imbalance. Everywhere there is an imbalance, right? However, when the liquidity sweep happened, look at the time that it happened. It happened around 1:30 in the night. So we had the Asian session do the liquidity sweep of previous day. For those of you who are questioning, Francis, how do I identify the high of the day and then the low of the day? It's so simple. There is, all I do is switch to the daily time frame. For every daily candle, the high is clear, the low is clear. Just mark them up, right? Sometimes if I'm on the 15 minutes, yeah, I can't be out. So I just put my times right there and then I identify the highs in there, the lows in there, the highs in there, the lows in there. You can also do exactly this by going on a daily time frame, right? On a daily time frame, if I should put a line on this particular daily candle, it would divide the whole of the sessions are there, right? If I go on a smaller time frame, let's say the 45 minutes, right? This will give me the whole day, and you can clearly see it's on the 22. So you don't necessarily have to go through the smaller time frame and be dividing it one after the other. You can just use the daily time frame to make it so easier, make the job easier for you. I hope this will help a lot. Okay, so no, not your phone. Oh, okay. Okay, so let me go into detail on the delivery of AU so far for some time now. Personally, I've been looking at AU, following it, even though I haven't been trading it. And the reason was because the price action on AU has been very beautiful for some time now. If you look on the 4-hour time frame before this particular reversal, we had a liquidity sweep down here, and don't be surprised if I go on the daily time frame, you're going to see something very clear down here, right? Same old stuff, right? This was a daily low, and this right here, daily low, right here, daily low, right here, daily low. We can identify all those areas. So going back on information, I want to, I don't know. If somebody can give me the date for 25th of March, what day was it? I don't know, let me check my calculator really quick. Okay. Checking the chart pulse.
It was a Thursday, Francis, 25th of March, Thursday.
Okay. It was a Thursday, and that means it was actually the low, the weekly low, right? I'm on 45 minutes time frame. I think somebody's asking. I'm on 45 minutes time frame. So it's a 2 hour time frame actually. So this area is actually a weekly low, and in some of our sessions, you remember I told you weekly low, previous weekly low, right, is sell side liquidity, right? So Thursday, Friday, the following week when the market opened, which is Sunday, Monday, Tuesday, Wednesday. On the Wednesday, we had a clear sweep of last week's low. If you look at the previous week from here, Friday, Friday, Thursday, we have Wednesday, and going on and going on. You can clearly see for that particular week, that was a very high of it, right? And this particular week, this is the low of it. We ran down the low, did the stop hands, and we broke market structure over here. And we can see all of this on the higher time frame, on the 2 hour time frame. Personally, the reason why I was looking into this yellow zone is because if I go on the 4 hour time frame, follow me carefully, guys. If I go on the 4 hour time frame, the bearish candle that did the liquidity sweep is on the 4 hour time frame. These are some of the things that people that trade smart money don't take into consideration because they don't have the understanding as to why it is like that. Why price is reversing higher than their point of interest. Some of you probably on this call are wondering, oh yeah, I had a point of interest lower and price never came into that point of interest. The reason is, if I go on a higher time frame and then I can see a particular candlestick that it was able to sweep liquidity on that particular time frame, then I'm going to stick my entry on that particular time frame and not change it. You can backtest this for yourself and you're going to see exactly what I'm trying to say. So this particular black candlestick right here is the last bearish candlestick that did the liquidity sweep. So if you break the market structure, you can only expect price to drop down into this same bull bearish candlestick before the reversal happens. So if I should put my fit from here to up there, let me switch over to smart money. Yep. Let's take this away. So if I pull my fit from here to the very high, this is our obvious low, this is our obvious high, this is the break of market structure there, a break of market structure there, right? We can see price did make a clear retracement, 50%, and into the optimum trade entry zone. And look where our institutional candlestick is sitting, right there inside the zone. Sorry guys, I don't know what happened, but then everything went off all of a sudden. But yeah, before it did, before what happened, I was talking about identifying the optimum trade entry zone. So some of you may be seeing on my chart when I draw something like, I write on my chart OTE. And you be asking me, Francis, what is OTE? What is OTE? All I'm trying to say is optimum trade entry zone. If I put my fib from a swing low to a swing high, and I'm looking for an entry, I expect price to drop within the 50% to the 79% zone. Some of you have 88% areas, is absolutely fine. Personally, I use the 50% and then the 79%. In that area, I call my optimum trade entry zone. Now, identifying the optimum trade entry zone, next thing you're going to consider is your point of interest within the optimum trade entry zone? What point of interest can you identify in the optimum trade entry zone? So easiest thing you can do really is that you can pull your fib, you can drag a box from the 79 area to where the candlesticks are, stretch it up to the 50% area, and every candlestick within that yellow box, you're going to start looking to see if you can find a clear point of interest, a distinct point of interest. In this case, it is very straightforward right here. So I can drag my line right here onto this open of the bearish candlestick that swept liquidity. And that very entry right there, you can see how many times we came in one, we came in there again, we cleared it. And if we go on a lower time frame, you will see that this particular candlestick that did the liquidity swoop here was also another daily sweep of liquidity before price went higher. I will break it a little bit lower once I go on a smaller time frame. But what I want to explain right here is a clear definition as to how price was being delivered institutionally. The 4-hour institutional candlestick was the candlestick that swept liquidity, and as such, that is where you're going to take your trade from. Now let's go down on the 2-hour time frame and see something. If we go on the 2-hour time frame, we can still see that this particular candlestick wasn't quite enough to break this liquidity. However, it was the particular same candlestick that cleared or broke the market structure. Sorry, guys. We broke market structure using that same candlestick we saw on the 4-hour time frame. You might be wondering, what was your confirmation for taking the trade down that area? What was the reason why price got to that point and then it reversed? We have so many confluence coming together to confirm that particular area where institutions delivered their price action. The intent of institutional trading is sweeping liquidity, breaking market structure, and defining directions of the market. Remember, the directions you see for an institutional setup is always temporal and targeting liquidity. Without liquidity, price does not move. So this particular bearish candle right here gave us the intention that price was about to do something, and it was clearly defined by I already identifying the weekly low. The previous weekly low, we have identified a clear weekly low. And as such, look what happened. We swept it, went up, broke market structure, came straight down to that very same area where everything began, and straight away we left. Further down, we can go even on a smaller time frame and see exactly what really happened. So if you look at the smaller time frame on the 45 minutes time frame, the last bullish price action that caused the break of market structure, right? The last bullish price action that caused the break of market structure. And as most of you know, we did clear liquidity around this area. I've done this already in some of my sessions. If you do not understand what I'm trying to talk about, it's as simple as it. Go on my YouTube channel, it should be there for you. We have clear liquidity area captured over here, which makes this particular move right here a breaker block, right? We had this sell, we had this buy before the price action that broke this low, which means we have our orders sitting right here, which caused all this move, right? Now, on the right-hand side, we can see price has respected the exact same area we marked on the 4-hour time frame. So going down on lower time frame, we had so many confirmations that came together to confirm why price moved away from that very area. Now, I did say I was going to tell you exactly what happened here. So this is one day. And this is another day. So if you look at my chart right here, actually, this is also another day. You can clearly see we had a daily low here and we had another daily low here, right? Before price was going, we knew we were inside the area price has to reverse on the 4-hour institutional candlestick. And the confirmation that made the trade happen in that particular day was price sweeping 2 daily lows. It doesn't necessarily have to be 2 daily lows. It just has to clear liquidity and into the area to confirm the buyers of going away. And that is exactly what happened. We cleared it clean and straight away, price just left. If you are taking the trade just based on the fact that you are understanding the clear of previous weekly, previous daily low, you would have been fine. But however, all of this price action was created by the structure right here. And the reason why I'm talking so much on this particular area is that people are so, I don't know how to put it. We just want to jump on the chart and automatically think, okay, I see this, I want to take a trade. It's not like that. Whatever institutions are doing, they have records of it, they understand, they have procedures as to why they are doing it. If you do not understand where price is coming from, then you will never know where price is going. Did somebody hear that? If you do not understand where price is coming from, then you would never know where price is going. The first thing you have to always do when you open your chart is to understand, have a basic understand of where price is coming from. What caused price to move the direction it's currently moving? Then you can understand, okay, price is not only moving this way, but rather it has an intention to clear this particular liquidity. Already, we've made it clear that price will never move except it has cleared liquidity 1 and moving towards liquidity 2. And that is the only reason you would enter a trade. If you do not have price clearing liquidity or sweeping liquidity or moving towards liquidity, you don't take that particular trade. And a clear example was Euro GBP. I sent this trade today. I sent this trade today. Price was around this area when I sent it. I think I can show you. Where is it? Where is it? There. The reason why I sent this particular chart was because I knew Euro GBP was going to go for a buy straight away when I sent it. The reason why I knew it was going to go for a buy was this particular liquidity area I identified. And why is it a liquidity area? If you've already gone through my session where I spoke about pullbacks, correct pullbacks, and corrections, then you understand the difference between this. Is a correction and not a full retracement. So this particular stretch around this area require a full retracement in order for price to fall. If that be the case, then your price action should be between the 50% and 79%. I did mark this area as a point of interest on my chart, and I took a trade from that particular area, even though I was looking at this higher time frame, higher point of interest. The reason why I was looking at the higher point of interest was based on, I think it was 5 minutes price action. Let me go down. Yes. On the 5 minutes price action over here, this was the last area price got manipulated. And how did it get manipulated? Once again, above this area, we have liquidity. That got taken up here. It means we have a breaker block set up. Price came straight for this candle right here. Already we have this rejection confirming this as a breaker. We came back into it and then we dropped. Hence why I was looking at this price action here for price to mitigate. We didn't get that delivered. I still feel like tomorrow we can have that price action delivered based on the fact that this has been the high of today. Most likely we'll clear this by tomorrow and then continue the sell. In my opinion, that's what I want to see. If that did not happen, I'm still confident of this going down into a sell. Everything pointing directly to what I've just talked over. Where is price coming from? Where is price heading to? What is the intent of price? We've already taken this particular correction that price made over here. It wasn't 50%, confirming we need a true retracement to happen right there. And also extra confirmation, this was a cipher pattern. So for all my harmonic pattern traders, it was as simple as that. Any questions before I go on, guys? Any questions? Can I have a refresher on break block? I can't see. Okay. I will try and go over break blocks. This might not be. Let's go back to AUD USD. So break a block is really whenever you see price create this sort of shape, right? Right here, we've taken liquidity. If this price break this structure, then the last buy candle in this leg, this stretch right here, the last buy candle that broke the structure becomes our breaker block. So if the last buy candle is up here, that becomes our breaker block. If it is down here, that becomes our breaker block, and we can stretch it over. Once price come back into this area, we can look to buy. Yes, it is recorded. Are we okay with breaker blocks now? Okay, difference between IC and breaker block. That is more of like a definition sort of question. So an IC is the last buy or sell candle that broke market structure. No, the last buy or sell candle before a sell or a buy move. I'm putting both bearish and bullish IC candles together, right? So the last sell candle before a buy or the last buy candle before a sell that broke market structure, right? That becomes your IC. And then your breaker block is the last buy candle or sell candle that swept liquidity before a change in direction. The last buy candle or sell candle that swept liquidity before a change in direction. Does that answer your question, Laura? All right, fine. I think I can share an example of this. What I think, yeah. Let's go on USDJPY. There was a trade I took today based on that. This particular wick right here, if you go on the lower time frame, let's go on the 5-minute. The reason why this price came so down is because of this particular buy candle, right? It was the last buy candle that swept this liquidity before a change in direction. That becomes our breaker block. So your entry, usually you can take it off the top of this candle or the 50% of this candle. Whichever way, this was just my re-entry for this afternoon, and that smash target also. All right. And you can clearly see it was the same thing I talked about on AU. If you pull your fib from here to there, right, this is quite a correction because we didn't get a body close on the 50 below the 50%. Price came back, took the internal liquidity and went straight up, and everything happened in a day, right? Everything happened in a day. This is just a trade I took today based on clearing liquidity of a previous day. Straight, I took my entry, put a 10 pip stop loss, and that's it. I can see some questions coming in. Let me take my time and answer them. Okay, so why did you believe breaker block was entry and not the lower IC? Okay, it's as simple as this. The reason why I take this as a breaker block setup, there is a difference between breaker block setup and IC candle setups. This is it. If I see this shape, whenever I can see this shape, I will take a breaker block setup. This liquidity got taken, and the last buy candle here before this break of structure, I will take this setup as a breaker block setup. It's completely different from trading, what do you call it, institutional candles. Prior to taking this liquidity, price make it, or the institutions make it quite clear their intention for doing this. Went higher. What was the reason for going higher? Came down and then came up, broke the structure of that same price action that swept the liquidity. You don't expect them coming back here after people thinking there was a sweep of liquidity here so they can sell. Right? So whoever that is selling around this area because, oh yeah, we swept liquidity, I am going to take my entry here because this is the last buy candle. I am going to take my entry here when price reverses. Good. Price came back, went straight for your stop loss. Okay, maybe you didn't put stop loss. You're going to wait for price to come back down. Price will never come back down to this area for you to close your trade. So breaker block setups are completely different from actual institutional setups. Hence why at the beginning of the session, I did say to you, understand where price is coming from in order to know where price is going. Does that answer your question, Laura? I think let's show some examples, like real examples. Let's go on USD JPY on a different broker, and I'll use it for. Let's go on this time frame. So all I'm trying to say is, right, if I get price, give me this sort of reaction. Wherever this has happened, it's just an intention to react off a breaker block and go higher. So in this scenario, there will be an institutional candlestick here. All right, you are waiting for price to come into institutional candlestick, then you can take your trade. However, the intention was already made clear when this became the last buy candle that swept this liquidity. This is where they decided to push price towards liquidity, and hence why that is the area they have their order sitting. They come back in there and they leave. Oh, come on. They come back in here and they leave. You will be waiting for price to come back here. It will never come back. Why? Because the intention to actually come up here was to sweep the liquidity of anybody who was trying to take a sell trade. If you put your fib from here to there, this is your optimum trade entry area for a sell. So if price should come up here, then you can continue to sell. Does that make sense? This is why we call it smart money, because smart money is smarter than the way you think. If you take yourself from here and it hits your stop loss, maybe you didn't put stop loss, so you're waiting for price to reverse. Okay, yeah, I'm gonna hold on. Price may reverse for me to get the trade. I can close in little profit. It will never come back. It went there. Okay, luckily you saw it coming back down. Quite okay. Yeah, it's gonna come back down. I'm gonna hold on. And this happened today. I know a setup that was posted that it went in, a little bit profit. People were thinking, oh, GBP Chef is going to do it. I'm just mentioning it because it was a typical example of trade that happened today. It's going to come back into profit. Yes, it did come, but yeah, because your directional bias is telling you to buy, you will never think of closing GBP Chef. And the reason is they already got you right there. Your entry for the buy is a reversal for a sell. Okay, so what shape would I look to trade institutional setup? The shape I look to trade is when price is coming down like that in a major trend. In a major trend and I break above this area, then I would trade institutional or IC candles. You might be asking me the question, Francis, it kind of looked the same as the one you drew because of course liquidity has been grabbed over here. But then the main thing, the difference you're looking for in breaker block setup is as price is heading down, this reaction, this price action from here will give you some sort of correctional move before this breaker structure. So inside here, you see this. Let me actually make it simple. Price go up, and then it comes down, taking the liquidity of this area. If this is the case, you trade breaker. If this is the case, you trade institutional setup. Simple as that. Let's change this color and make it red. If you have this shape, you trade breaker. If you have this shape, you trade institution IC candle. Is it properly explained now? You can go in the chat, backtest it, and you're going to see the difference. How many times you've been waiting for price to come into institutional candles, but then it never happened. I'm going to show you a critical example. Oh, like waiting for my whole life. Bless you. Euro USD on higher time frame. There is something very, very significant. Euro USD. And this will blow your mind, like proper blow your mind. Let's go on the weekly time frame. There is a setup right here. Let's go on the daily. I can't see clearly here. Liquidity got taken here. The last sell candle before that liquidity got taken. Look at this. I didn't create that. Price came back in there and boom, gave you a nice sell-off. Are we following, guys? Once again, look around here. We took liquidity around this area. The last buy up candle that swept the liquidity. Look at that. I didn't create that. It is an algorithm that is being used by the institutions. If you know where to implement it, then you will get it right. Hence why, even though I'm teaching you it, but I'm still telling you, go and back test it and find how many times this is happening the way that I've taught you. It's the same thing. Let's go on GBP USD. I didn't plan on teaching this, but the questions brought themselves. You see this one right here? A straight setup, clean, high, low, lower high, lower low. Then we can trade it institutionally. This one, we swept the liquidity down there. This was the last buy candle that cleared this high. And this is the difference I meant. In this way, this becomes your entry. In this way, high, low, high, low, high, low. The last buy candlestick before this sweep of liquidity. Now we can trade a breakout. Am I making sense, guys? Okay, so somebody's asking, oh, pennies are dropping. Okay, I'm going to go through the chat box and answer some few questions before. But how do you differentiate? In order to take an entry from here, I promise you, if you go on a lower time frame, this is a very clean setup for you to take. A very, very clean setup for you to take. What do I mean by that? 1, 2, 3, 4, right? This candlestick's over here. You'll be surprised. This is actually a previous weekly low. The same setups we've been going over, it will be a previous weekly low. Price went down, swept the liquidity. You go down on a 15 minutes time frame and you see a simple institutional entry on a smaller time frame that will give you a very clean entry. Let me go on the paid account and see and show you something on GBP USD quickly. I think I was on the daily time frame, wasn't I? I think it was this area I was talking about. Oh, come on. Stop messaging me. Now we're going to go on a lower time frame and see exactly what happened around this particular area. Let's go on the 45 minutes time frame. Prior to price running this basic liquidity, lol, it would be so funny if it was not a messaging, possibly, right? Prior to this particular running this low, look what happened. We're going to play, right? We run the low, went higher, broke market structure, and look what price did. Pause right there. What happened? Break a market structure right here. I want you to look at the time. What happened around here? Asian consolidation, right? Asian consolidation all around this area. We broke down. What was this? Previous daily low. We run the previous daily low, broke market structure. Now, on the 45 minutes, we clearly have a point of interest. And what is it? An imbalance fill. So everything basically we're looking on a higher time frame. That is the reason why talking about fractals is good, but you have to understand that fractal will only happen based on what is happening on 1 minute, 5 minute, 30 minute, before you see the picture on a 4 hour or on a daily time frame. So every single thing that I teach, entries based on breaker market structures, returning into optimum trade entries, taking trades, fill of imbalances, institutional candlestick, order block entries, breaker block entries, whatever you see on a higher time frame is only going to give you a perspective as to what you should expect on the lower time frame. You're wondering how big your stop loss is going to be on a higher time frame. Just drop down to the smaller time frame and you'll see all the key things you need to enter that particular trade with a little risk. Now you take your entry from this area. Let's see what happened. Break a market structure once again. Now, if price should return into our optimum trade entry area, we can further look for a re-entry on a smaller time frame. 50% and below, anywhere around this area, possibly this particular cell right here. Straight onto that zone, price just left. Have I answered your question? Who was it? Who asked that question? I think it was Juan. Have I answered your question, Juan? Great. So you don't have to worry about the fractals as to how big the stop loss is going to be. If you have an entry, a point of interest, you want to take the trade, and you can't afford taking a big stop loss, just drop down to the smaller time frame and be patient. The opportunity will drop. Oh, Laura says it's a booty call. Well, it might be. Yeah, let's go back. Let's go back to learning how to trade and stop talking about booties. How do you decide if you're aiming to take a previous weekly high or previous daily low? Okay, how do I decide? I said something at the start of of the Zoom session, and I'm gonna go back and repeat it. If you know where price is coming from, then you will know where price is going. If I clear a weekly low, then I will target a weekly high. If I clear a daily low, I will target a daily high. If I clear a session low, I will target a session high. I think there is a clear example that I took on. I don't know. I'm thinking about the pair. I think it was EA, Euro AED. So if I look at Euro AUD right here, let's go on the daily and then I'll do the divisions quickly. Monday, Tuesday, Wednesday, Thursday. Good. So this particular line right here is my Monday candle, Tuesday, Wednesday, and Thursday. Now let's go down to the smaller time frame. Prior to price moving away from this area, this is another day. We run a daily low. My target is right here, daily high. Simple as that. And once again, a clean breaker block setup for a re-entry. I didn't create that up. I didn't make it up. Why is it a breaker block entry? As price was coming down, it got here, stopped. Went higher before it dropped to sweep this liquidity. So this particular low that was cleared gave us this breaker block setup. Prices dropped into it and boom, left. I hope this answers your question, Laura. I'm waiting on you, Lara, because I want to know. I think, I think so. Oh, no, I don't want you to think so. It's quite clear. All right. We took a daily low. Our target is daily high. I'm not too concerned about where else price goes. After that, I can rethink about what price is doing and decide whether I want to take extra trade. But as it stands, if you ask me, Francis, would you take trade inside this area? My question will be no. If I want to take this trade, possibly yes. I could take this sell right here, possibly yes. The reason is I don't have any reason for buying this trade. I don't have any reason for buying that trade. I hope this helps a lot, guys. The last buy candle on breaker blocks again, the last buy candle before the sweep of this particular liquidity. Let's play it. Price run above it. Come back into it, mitigate it, and go away. Your entry there, simple as that. Your target above that particular high, simple as that. And this happens over and over and over again. Any more questions, guys? We've done an hour already. Probably it was Nana telling me, Francis, your time is up. But what if it was continuing lower? What do you mean by it was continuing lower? If price breaks this breaker block, I don't expect price to reverse. I would expect price to just go straight for your stop loss. Wherever you put your stop loss is just going to be attacked. Wherever you put your stop loss will be attacked. It doesn't matter. The break block is why this particular shape was made by the institutions. And they understand that if I want to take my profit from this area, then I want to go higher. If I don't take my profit from here, it's still my intent to make, if I don't take my investment from here, it's still my intent to leave my investment in to make some profit. So if you're looking to buy here, whoever is trying to trade the breaker block will end up getting stopped hunted, and straight away price will just go up, go down. I'll take 2 more questions and then we'll finish off on today's session. 2 more questions. On a breaker block, do you look for PPU entry? Exactly. That's all you do. This particular candle right here, you take the 50% of the candle, and that's your entry. Do I set pending orders for entries? When I'm trading breaker blocks, to be honest with you, personally, I don't want to set pending order. And the reason why I choose not to set pending order is because with breaker block setup, the low is quite further away. So most of the time, if you really want to go in for the very reasonable setups, okay, I don't want to be so, what do I say? I don't want to be so cheeky to these institutions and put my stop loss just below this area, right? You want to enter the trade here and put your stop loss there. You're probably using like 1 pip stop loss, right? 1 pip or 2 pip stop loss. Sometimes what the institutions do is they come lower, take you out of the trade before it reverses. So most of the time, what I do is I try to keep my stop loss below the previous low. So around this area, and I allow price to go away. That's the reason why I don't set pending orders when I'm trading breaker blocks. I'd rather want to see price give me the reaction, do a market execution, and then straight away, once price move away from there, I put my stop loss into profit or I break even. Okay, somebody is asking me, Francis, I'm looking at vertical lines. What are those vertical lines? It's just division of the days. So Monday, Tuesday, Wednesday, I just want to understand what day it is and understand the price action that happened in that particular day. Hence why those vertical lines, nothing else. I always get lost on weekly time frame to look for breakers. You get lost. The Dinah, I don't understand. What time frame? Oh, you always get lost on what time frame to look for breakers. Okay. What time frame do you want to trade? That's the question. If I look around here, for instance, let's drop down to 10 minutes. Drop down to 9 minutes. Drop down to 8 minutes. Let's play a little bit. Right? So even if I should go on most of the time frames, you can still clearly see that this was the last buy candle before the break market structure. You're trying to find confluence. How many time frames are confirming what you've seen? It doesn't have to be I need a perfect breaker block. I want to go on all time frames and make sure that it is there. You need the confluence, confirm. What is the intention? What time frames are they compounding together? Because remember, whatever they're trying to do, they're probably doing it in minutes, they're doing it in seconds. You're trying to find clue as to why they came up with that particular reason, hence why you run through different time frames and see if the area you've selected is quite true. And if it is true, for example, this one, you're going to see them standing there, the same zone you've already marked. Other blocks should be the same as a buy to sell or sell to buy IC. It's the same. It acts the same. The only thing is other blocks acts in the opposite direction to the usual institutional trades that we take with the IC candles. I have a video on other blocks. If you're very confused on that, I suggest go on my YouTube channel. I think so. I do have it. I do have it hiding somewhere. That's it. So if you're confused on all the blocks, just go to this video, and you should be able to get yourself up to date on how to trade using the odd blocks. Like I said, I promised I'm taking 2 more questions. I've had 3 questions. Thank you all for jumping on the call. I will catch up with the team again this week on Sunday, I promise. I haven't done it for a long time, but this Sunday I will be meeting the team. We'll do a weekly outlook, and then we'll go over last week's review, which is this week, and how price has played out to understand what we're going to do for next week. That's the reason why I do the session. I want to understand where price is coming from in order to see where price is going. Oh, now I see Nana on the call. I see Nana on the call. Okay, guys. I'd want to appreciate Nana, actually. He's my mentor, so whenever he's there, I want to mention his name. I want to thank him so much for the knowledge he's imparted onto me. Most of the time, he's back door. But guys, give him some fives in the chat box. Show some appreciation to this man. Show some appreciation to this man. Give me some fives in the chat box for Nana, my mentor. So if you're asking where I learned it from, Francis, how did you get all this wisdom? Where did you get all this knowledge? It's from this man. However, he's always the quiet one, not talking. I'm the one making the noise. Sorry, boss. I don't know if Nana, if you want to say something. 1 minute, 1 minute. Want to hear from you. Let me see if he's still there. Let me unmute him for 1 minute. Can you say something, Nana? If you're free.
Oh, this is too much noise over here.
Too much
Too much
noise,
noise
right?
over here. Thank you everybody for jumping on. And
Okay.
then I heard there were some new gems that you dropped on the poll. We'll talk about it back door.
All
But
right.
anyway, I appreciate you and thank you for doing whatever you're doing for the group. God bless everyone.
Yeah, you're welcome, boss. Okay, we'll catch you later then. All right, guys. We'll see you on Sunday. Trade safe. Please share the chats. Let's talk about trades. Let me know about how you feel. And then, yeah, we'll take it from there throughout the week. It's been a good week for me so far. I hope it has been for all of you as well. Let's enjoy our time on the chat and make some good monies. Have a good evening, everybody. Bye. Bye.